Hi all, and welcome back to my Digital Banking LinkedIn Live series. I'm Daryl Canup, Senior Director of Portfolio Marketing here at FICO. And today we're going to continue the discussion on the 11 Commandments. This is number 2 of a 5-part series we're doing. And we're going to loosely cover off Commandment number 2, which is be personal in this impersonal channel. Commandment number 5, engage me, teach me, and feed my TikTok obsession, and that's a real thing. And commandment number 6, use your branch wisely. Those bricks and mortars are expensive. Let's make sure we utilize them appropriately. And today we're lucky to have Milena Vinsky, who's the associate partner and head of behavioral science and cognitive analytics practice at IBM, join us today. Who better to talk about the importance of humanizing the customer experience than Milena? I met Milena in Spain of last year, actually, and we were at a conference there on the future of digital payments. So she's got a great background. Looking forward to having a conversation today. And before we kick it off, Milena, why don't you go ahead and introduce yourself?
Sure, I will. Thanks so much for having me, Daryl, and the FICO community more broadly. It's not Spain, but I'll take it for now.
Next time.
My background is, entirely in behavioral science, did a master's and PhD in cognitive neuroscience, and have spent about a decade since using what we know about the brain to help us solve some of society's most challenging problems, working for a number of management consulting firms, now currently at IBM. And really in that practice, we take sort of the social and the cognitive and the emotional factors that drive decision-making and what that means in terms of shifts in our society at the macro level, and then within organizations at the more micro level, to help us solve the problem in kind of a unique and more human-centric way. I think within IBM, I have honestly a dream job because it's the behavioral science team and our cognitive and analytics team. So really intensive analytics, AI, machine learning, modeling. So I think I sit at a great spot of being able to really understand a problem from 2 really important points. One is from a top-down framework where the foundations of human behavior give us an anchor on which we can understand the parameters of the problem. Some of our expectations and assumptions there around how people will behave and the decisions that they'll make. And we get to anchor on that from the top down. From the bottom up, we're getting this incredible viewpoint into the current state, sort of the pure analysis, the facts on the ground, the outliers that are driving major shifts that we're seeing, and more importantly, kind of the view into the future when we start talking about predictive analytics. So I like to think that I have a joy job and that I sit at the nexus of those 2 incredible competencies. And I get to do so sitting at the front seat of large-scale transformations happening around the country and around the world. So obviously, I think that's why I'm here in terms of being able to talk about the human side, because I get to live and breathe that every day.
No, that's fantastic, and you're absolutely right. I think it is a very interesting role, and certainly a space I played in more recently. Previous to this role, I was head of the digital practice at FICO, and a lot of that is how do I use data to really understand how people are actually making these decisions. So bringing these kind of 2 obscure things together and trying to figure them out. All right, with that, let's jump into some questions. And so, financial institutions really began their digital transformation journey well over a decade ago, and I mean, fundamentally, every time there's a new level of computers or analytics that come around, there's this push to do this. But there's no doubt it's significantly accelerated over the last almost 24 months now, 23 months if we want to go back to March of 2019 when we started or 2020 when we started lockdown. The reality is that banks are realizing various degrees of success in their transformation efforts. Milena, why do you think that's the case?
Yeah, I mean, we're seeing it on the ground quite heavily. I think the nature of the problem is inherently tricky in financial services because not only do you have very complex products that are understood by very few, you are also navigating a shift of a history where trust and transactions are managed through the shake of a hand and the eye to eye of an individual to an individual, because there is an asymmetry of information. There's an asymmetry of understanding due to the complex nature of the products. And so you require that person-to-person contact. And that's how we have evolved over millennia, is to be able to understand that and generate that trust. So it's a very tricky problem in that trying to lift and shift that into a digital environment requires a whole other level of complexity in terms of how you actually design those experiences and execute on those experiences and know when to do digital and when to do in person. because it's not always going to be the same. The second piece, of course, to the complexity of the products is that you are navigating transactions with an individual, not at just one moment in their time, but over the seasons of their life. Naturally, their needs change, their personalities change as well, and the the nature of their financial well-being has also changed. So I hate to use this word, but somehow financial institutions have to figure out how to create a dynamic omni-channel experience, that's the word I don't necessarily like, that is extraordinarily intuitive and personalized. So you need an immense amount of data. You need an integration of that data in a way that is meaningful. You need to build an infrastructure that is not only solid enough to manage transactions and the flow of transactions that are needed, but also nimble enough to bend and flex with how society changes and how quickly it changes. And so where I see a lot of organizations fall down is that in its own right is very challenging, but you need to have a very strong analytical framework that is grounded in basically the marginal utility of every investment in the customer experience. We do that really well from being able to say, here's a shiny object, here's our business case. But in reality, what drives the marginal utility of true experience that matters for a customer? When we talk about matters, we talk about the formation of perception of value, of a brand's value. And right now that's a little bit murky because the behavioral piece is missing from it. And so that's one part. The second piece, so the first piece being the marginal utility. The second is having a really strong framework for knowing how to pivot. So transformations will never go well in that they will always change, and your ability to navigate that change is what determines success. What we've seen work really well, but it's definitely not standardized practice, is what is the foundational framework of change that you are operating on that is driving all of your design decisions around the experience and your investment decisions around that experience, leveraging that same framework on which you can monitor and measure and track your performance, where if you see deviations in that performance, you have a very clear and articulate pathway forward for how you need to optimize current features and functionalities to drive the change that you're looking for. And more importantly, make very difficult decisions where if you're not seeing the change that you need, where do you need to automate? Where do you need to create stronger and perhaps more strict consequences? These are very challenging conversations to have, and knowing how to pivot and how to optimize from a grounded framework is something that a lot of organizations are currently missing.
Yeah, I mean, those are great points. Let me react to a couple of things because some things popped to mind right away. You leaned up against business culture a little bit without using the phrase business culture. And I think one of the things that I saw a lot of and still do, the organization, we're still organized around product and P&L ownership of those products. Yeah. And then individuals are rewarded for hitting certain targets within the areas that they own. And then that has to compete across the spectrum of the business. And so that lack of alignment around the customer as the center of that, as opposed to my P&L ownership, it still helps get in the way an awful lot. The other one that I really liked is this idea of body language, right? I mean, the thing that we miss when we go to the digital space is body language. And it's the reason that we've certainly seen a lot more video calls. We were talking about this earlier today, a lot more video calls in the last couple of years than previous, because we understood that we're missing that connection. And well, how do you do body language in a digital app? Right. And how do you impact, how do I do how do I greet you? Right. What time of day, things like that. So I think those are really interesting. Well, let's get into some examples. So what does humanizing the customer experience mean to you, and why is it important? And can you share a few examples of why you think banks can do this?
Sure. Well, I mean, why I think it's important is because it's my job. So obviously, I think
the bills.
I'm a little bit biased in that sense. This question is is so nuanced. And the reason I say that is because I think everybody has heard somebody have a perspective on what does it mean to humanize the customer experience. And I think most CEOs would say, well, we've got digital design folks, we've got design thinking, we've got experienced designers, we've got, a bunch of different types of brains sitting around the table trying to really triangulate like what matters to the person and how do we balance that with the business. I think for me, what it truly means to humanize the experience is to take a step back and understand why it's really important and how that then drives the decision making from a business perspective. So that being that you've got a very volatile and uncertain and very complex environment, right? Just geopolitically, generally, a lot of things are changing, but the competitive landscape through technological advancement is also creating a lot of pressures that didn't exist before around the boardroom of the really big companies. And I think that means a lot of the innovation is happening right now through anxiety to get to know more, to do more effectively. And in a rush to build an intelligent empire, very much in the service of the fourth industrial revolution that we find ourselves in, it's inspiring this very rapid extraction of what I like to call sort of the new age resource. It's not the iron and ore that's extracted from the ground, but it's the emotional and cognitive and social capital of customers. That's what we are fighting over. And that naturally creates the need for organizations to be meaningful and relevant and authentic in a way that they've never had to before. And the reason why I say authentic is not to, pay tribute to all the books that are in the airport around the importance of authenticity. I mean it in that you have to be truly authentic in your decision-making architecture to sustain value in the long run, because meaning itself and relevance itself change and are just as dynamic and volatile and ambiguous as the world itself. So that's a long-winded way of saying being personal, being relevant, having a meticulous focus on authenticity so you never stray from your decision-making, because if you mess up once, it can be catastrophic. But why this is really important is because I think it all boils down to, for me, humanizing the experience is having the right framework in place to make the decisions that are necessary based on your brand promise and your value. But more importantly, being open to test and learn and grow, because people change as much as the world changes and nothing is static. And if you don't have a good, strong test and learn strategy, a good way of being agile in your ability to execute and deliver, you're always going to miss the mark. Humanizing the experience is being just as human in your approach and organic in your approach as the people themselves that you are trying to service, which is very challenging to operationalize.
Yeah, I like your comments there a lot. They lean up against a number of things that I continue to kind of think through. And I've got this article or book that I keep throwing around in my head around what makes successful businesses for a long period of time. And when I look at them, there's these three categories: fast, agile, and resilient. And that last thing you mentioned around learning, resiliency is created through learning, right? Fail fast, fail cheap. And I attribute that all the time to Google. I'm not sure it was them, but it's that philosophy of I can definitely do this better, but what is better? How do I measure better? Right. So I think we've now one of the beauties of these channels, the digital channels, is there's a great deal of feedback from a data perspective that you can get if you're smart about it. Right. And, we look at that a lot at FICO, and IBM does as well. How can I make this better? Well, then let's actually make it better. Let's measure to see if it's better. And what is better? Right. The other things that you mentioned too around engagement, right? And there's a whole category. We can use authenticity, all these other things. Marketers forever have talked about getting more engagement, right? Certainly as we've, made this switch in the last 20 years, really to mature this digital channel, these digital channels, engagement and what that means. Well, that's, more engagement. Well, how do I measure more engagement? Is it good engagement? Is it bad engagement? All those things. But I do think that, we are at a point where we can kind of deliver on some of those. One of the humanizing examples I like, and I give a plug out regularly to Lemonade Insurance, because I think they've done such a nice job in their app and their onboarding and the way in which I work with the app. And so one of the things when I bring it up is it says, "Good morning, Daryl!" ! There's two things going on there, right? Because what we're really trying to do when I go into an app is like when I walked into a branch, there's somebody said hello, and even better if they knew my name because I'd been there before. And they also said good morning. It was morning. I have tested it in the afternoon. They say good afternoon. And then that exclamation mark, as minor as that seems, it's actually it's like they're excited. So now they've said my name. They've put context around the time of day, and they're excited about it. a little tiny little thing that makes me feel a lot better and replaces some of that greeter that you might have had in the branch, or the branch manager that came over and said hello while you were waiting in line.
Yeah, that's what I was exactly going to say, Daryl, is like both of those, or all of those elements of your experience, are direct replacement of the context if somebody was there. And it's those very fine nuances that actually, from a neural perspective, in terms of reorganizing the way that the brain is thinking about an interaction between yourself and a digital device, reorganizes it into a social and like cooperative pattern, which it's remarkable that you can do that on a digital device to a human. But it's those tiny nuances that are contextually important for if you are person to person versus digital to person.
Yeah, no, I think I know they've worked with a behavioral scientist on that one, because I've done a bit of work on that one. I think there's tons of great examples, and as I said, I use Lemonade Insurance all the time as an example because I happen to be a customer, and I find it fascinating. It's also an example of an onboarding or application experience where they're not trying to make it the shortest experience possible, which I think there's a failure on many fronts to make this thing as short as possible. It's to make it as engaging and intuitive as possible. Yeah. The fact that it's a little bit longer, like it took me an extra 30 seconds to apply for my pet insurance because it's conversational. It was actually just a much better experience. And I had did it take 30 seconds? Did it take 90 seconds? I don't know, because it was just a good experience.
Well,
so I think it's fascinating.
The perception of time is relative. Right? It's, the theory of relativity. And I would just say that's another classic example of marginal utility that is not used effectively. When we're talking about questions being asked to a customer where those insights are going to fundamentally drive the way that you design your value proposition and create an experience, you have to evaluate the marginal utility of every additional question asked, right? Right now, there's an over-indexing on short, easy, fewest questions possible, but at the sacrifice of really rich insight on the customer. And when you think about the onboarding experiences that are benchmarked, like setting up your new iPhone, that's not a 10-second experience. It's much longer than that. So what industry benchmarks do we really care about that we can align to that are truly driving expectations in the market? Things like setting up your iPhone that you can hinge on to, where if you create from an experience perspective a similar experience, the brain will just associate those two together, and therefore expectations will change and you're able to derive more information from that customer, right?
Absolutely. I think too, we're leaning up a little bit against friction here. And when I think about friction in an experience, it's the appropriate amount of friction given the perceived amount of risk. And then you should also bring into a value base there. Not everyone receives the same friction. Also, what was friction a decade ago, linking a banking account in 2014 when I was at the startup, that was a huge deal. Well, now it's so commonplace in the US that the level of friction that it represents is significantly less than it was 5 years ago. And what's friction today won't be friction in the future, and there'll be ways that we make improvements in technology. But let's jump ahead to the next one. I think so I really I want to get your opinion on this one. How important is the concept of financial wellness in your view, and how can banks use this to use education to humanize the customer experience?
I love when you tap me on the shoulder for this question specifically, because this is something that I experience in conversations with financial institutions almost every day. It is highly top of mind. And that's because financial wellness is incredibly important. I consider financial stability to be a determinant of health, just as much as like BMI, your body mass index is a determinant of health. I think financial stability is, and I think majority of people who, study the area would agree, or I think a lot of people would agree. And that's because just as when you're physically unwell, you feel tired and you feel sick, when you are financially unwell, you are tired, you are stressed, you are anxious. But most importantly, it actually changes your cognitive structure. It changes your understanding of risk and reward, of pros and cons, perceptions of value, our discounting of the future and the risks that we'll take today, even though it could create issues in the future, all of which very much can change the trajectory of an individual's life. And so vulnerable populations only get more vulnerable. And in an era where you've got this asymmetry of information and a power imbalance between institutions and the individual, you run into some really big problems. What I love is that organizations are now focused on it and are using that as a lever to humanize, and that we understand that if we help you build stronger financial wellness, we are your partner in this life. We are your go-to comrade that you can throw your hand around and say, help me get through this right now. And you can know that they're going to help you. Where I have seen from an education perspective, I think there's a few different schools of thought. I think the research is still out on whether or not true education leads to boosts in financial wellness. What I have been seeing more on the ground and in research is that it's more about the incremental gains over time, where with every experience, there is a reinforcement on the why in that conversation that is then driving the incremental knowledge reset, or increase in knowledge around their own finances and their decisions that they can make. That's the sustained model that I've seen work more effectively. So when you're humanizing the experience, where every interaction is not just relevant and meaningful, but insightful relative to their overall portfolio and financial health, that's where you can drive like really significant changes. The one thing that I will say organizations seem to be struggling on is being able to peg where people are in their financial wellness to then drive the experience design. And one of the biggest problems there is that financial wellness is purely relative. You can make $100,000 and feel like you make $1 million, and you can make $100,000 and feel like you make nothing. It's all relative, but the impact on the brain and behavior is the same. So how can organizations start thinking about relative well-being and start fine-tuning their engagement models to cater to the true financial well-being of each of their customers versus how much money they have in their bank account?
I think there's a ton of great points in there. A couple of threads that I would pull on. I mean, I think that we're in a much better position from a technology standpoint now to really be able to pull all information together. And one of the challenges when we think about using technology to understand an individual's financial situation, set aside wellness for a minute, it's that if you bank with two banks and your insurance is over here and the insurance industry isn't as far along in their data, and how does this all link together? I think we're getting to be in a much better spot from a technology standpoint with the ability to link bank accounts and other things to pull into this dream of a PFM, a personal financial manager, right, which is digital. Now, that challenge still exists, although it's much better than it was. And then the other one here is that I think there's often a bit of confusion around digitally savvy versus financially savvy. And I think that, if to lump a bunch, and we shouldn't do this, but just if you're 20, you've grown up with an iPhone or a smartphone in your hand, you're very digitally savvy, but you might not know a bank account from, a deposit. You don't know a credit card from a loan necessarily, what's appropriate, where they're priced, how they all work together, how that impacts your credit bureau and other things. And so I think there's a lot of confusion kind of around that piece. But I'm heartened by the fact that we're talking more and more about it, and there's more and more technology being put to bear here. And to me, it's financial wellness is not just an engagement model that we want so that we get the wealthiest customers put their deposits at our bank if we're running a bank, but it's actually it's a way of humanizing and understanding real challenges. And in fact, you could be taking customers that are on, as you said, that are vulnerable, and there's a lot of regulations that define that internationally. The UK specifically has some areas here where you've got to watch what you do there, or you are at peril as an institution, not just your customer. Yeah. But it's this ability now to do the right thing, right? To actually educate people, not get them into trouble, recognize that where they are, support them. And the digital channel has a great opportunity to do that. I think people are hesitant to walk into branches because there's a certain amount of shame sometimes associated with, these sorts of challenges. So I think digital channel, more than anything, I think has a great opportunity to really aid things here. I'm just looking at the time. Any final thoughts before I wrap us up?
No, I'm just really happy that you're doing this, Daryl. I had the joy of watching your commandments talk, and I really loved it, obviously. And I'm just really happy that you invited me here to talk about this. I think organizations have the right momentum, and they're headed in the right direction. What I would like to see is a stronger focus on rigor and frameworks, and thinking about true utility of what is driving the customer experience and what is really good for the organization. Because
Right.
only when they're in perfect balance that we can really move forward and do some damage.
Yeah, I love bringing the science to bear here, because I think that between the data and the science and the customer, we can get this thing right, or we can at least get this thing in better shape. No, so delighted to have you. So everyone, thanks for tuning into the second episode of Digital Banking LinkedIn Live series. I'll be back next month to talk data. If you ignore it, you don't ignore it, work with it. Please stay tuned for those updates on the FICO page. If you're interested in learning more about the 11 commandments of digital banking, please click the links below to receive the ebook and access to the new blogs that we've been putting out on this topic. And again, Malena, thanks so much for taking the time. We're delighted to have you. I like surrounding myself with people who are smarter than me, so certainly this is the case today. Listen, everyone, have a great day and be safe.
Bye, Daryl.
Thank you.